everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and we all remember, at least I think we do, sometimes I wonder, the 2008 financial crisis, and let's face it folks, we never recovered, but that said, on September 15th, 2008, we saw Lehman Brothers declare bankruptcy. The Dow dropped 504.48 points. Massive calamity. No one can doubt that. But of course, to this day, the banks are still bankrupt. We will go into that in a second. Have things really changed? I don't think so. But let's look at this article from Zero Hedge that says 10 years later, many underwater counties have not escaped the housing crisis. And as the article goes into, about 5.1 million homeowners in the United States are still living with the consequences of the global financial crisis, according to a new report by Adam. As of June 30th of this year, about 1 in 10 homes in the United States was seriously underwater, an indicator that the market value of homes were at least 25% lower than the balance on mortgages. While this rate is an improvement over the 12.8 million homes that faced the same issue in 2012, it is still twice the number that is considered to be healthy by real estate analysts. And I quote, "These are the housing markets that the recovery forgot." And I have to also mention, okay, so we also have the return of the collateralized debt obligations, mortgage-backed securities, reverse mortgages, credit default swaps. We can pile it on and on and on. A whole bunch of banks recently have been getting sued for an insane amount of money for crisis-era misconduct, but then at the same time, they're also giving people bad advice today, and they're doing the same things they did back then. And we look at the cash-to-deposit ratio at almost all the big banks, and it's absolutely astonishingly low. Many of them have 1% or under of deposits covered in cash. Just think about that for a second. And John, we have a few other articles right now that you have up on the computer.
Well, actually, before you go into that, Josh, I just wanted to mention in 2008, of course, we have had many crises, of course, that have happened. You know, we've been talking about the housing market for a very long time here at WAM. And of course, in one of our latest videos that we did on the housing market, remember we were talking about the negative equity and, you know, houses on the water. And most of those markets were the ones that, you know, were affected in 2008. So they haven't really recovered any of them. And
a lot of them in Ohio, actually, an amazing amount.
Yeah, Ohio, Chicago, Detroit, you know, all the suspects. But then now there's new housing bubbles, you know, in San Francisco, in Portland, in Seattle, and a whole bunch of wide array, New York, DC, all over the United
Jersey,
States. Yeah, and a whole new array of areas that weren't pumped up as bad during the 2008. So now they're gonna pump up the next, you know, part of the United States. So I don't think there's too much left of the real estate in the United States to be pumped up. And then, of course, we are, you know, in the massive, you know, it's really lurking around. The problems that, you know, we faced in 2008, they're coming back to really bite us now. And then, of course, Nobel Prize winner Shiller sees bad times in stock market ahead. And of course, he's famous for his P ratio that he always puts forward, the Shiller P ratio index. And it's very important to follow that because he is able to, you know, predict if a stock is massively overvalued or undervalued. And what it shows recently is, you know, the U.S. stock markets are, you know, at new highs in the PE ratios. NASDAQ, you know, we were talking about the FANG stocks back, how overvalued the FANG stocks were. Especially Twitter was the worst one, I believe, at 89, and the normal is 10 or so. So it's some of them are in massive bubbles. And you were talking about how Cynthia McKinney was, marked due to spam. And then, of course, Twitter is spamming everybody with ads everywhere. Well, I think it's the demise of Twitter.
And all that Cynthia McKinney is doing is replying to people on Twitter. And also this article says Yale economist and Nobel Prize winner Robert Shiller. It's sad that his name's Shiller because, of course, there's going to be stupid comments below this video. But anyway, Robert Shiller's measure of long-term stock valuations is pointing to much weaker returns ahead. The Shiller Cape has been a reliable indicator, seeing downturns on Black Tuesday in 1929, Black Monday in 1987, and the dot-com bubble. Shiller's friend and sparring partner, Jeremy Siegel, disputes the outlook, saying several dynamics argue the consistent, strong performance. But let's go into that for a second, guys, because what I find interesting about this is that we're seeing massive problems in the auto industry with low demand, We see massive problems with the trade war. We see massive problems at the same time as we see these bubbles inflating in the housing market. We got all the banks are insolvent. We've got all these banks like Deutsche Bank they gotta like write their will, and they're pushed forward a bit by the Fed on that, but they're looking to write their living will or whatever, and they want to collapse into a holding company in order to kind of offset some of the damages that will occur. Of course, they were downgraded by the S&P to BBB+. And we've got a whole bunch of other banks, Wells Fargo caught in all these different scandals. We got the dollar constantly getting pumped into oblivion. And, that's another major issue that will inevitably end in disaster when we got all this fractional reserve lending going on in all these banks. And we got the dollar, which every fiat currency throughout history has reverted to zero. We can't put a date on it. Every single video we get this comment, well, you've been saying that. If you watch the video, I'm glad those of you watching the video are watching, because most of the people that are commenting about this don't actually watch the video. They see the title, and within 10 seconds of the video being published, they write this long comment that they couldn't have humanly written in that period of time. Robots, most likely.
Must be Russian trolls.
Yeah, or US trolls or Chinese. Anyway, the fact is you cannot put a date on the crash. You know it's going to happen, however. So, I mean, the fundamentals are way off the table when it comes to the crash. You just don't know what's going on with the monetary system in the markets. You just know that we've seen this before. We see the preparation for it. We have Ray Dalio, who's saying a lot now. John, can you bring up that article there? We got Ray Dalio remembers the moment he saw the financial crisis coming. This is the big one, as the CNBC article goes into. And as it says, in the summer of 2007, the U.S. financial system began to show cracks. The number of homeowners with weak credit who were delinquent or in foreclosure on their mortgages ticked upward that June, as the national average interest rate for a 30-year mortgage rose to 6.74%. Later that month, the Federal Reserve released a statement on subprime mortgage lending practices, warning that consumers may not fully understand the risks and consequences of loans with adjustable rates, which started out with the low interest payments but quickly became more expensive as interest rates rose. On July 17, 2007, investment bank Bear Stearns revealed that two of its hedge funds, which held significant investments in subprime mortgages, had very little value left. By August, the billionaire founder of hedge fund Bridgewater Associates, Ray Dalio, realized the U.S. was in a dire situation. So bad, in fact, he sent out a memo to clients and policymakers on August 10th, 2007, titled, "This is the Big One." And now going on to present day, Ray Dalio says in this Market Watch article, rising debt, income inequality, and political polarization are a recipe for a nasty downturn. And as it goes into, the billionaire hedge fund manager warns the next financial crisis will threaten capitalism and democracy. Well, I'd have nothing against it threatening democracy, because yeah, that does a lot of good for us. But anyway, let's go further into it. It says, let's make one thing perfectly clear. Ray Dalio sees parallels between the US today and during the unstable 1930s. But the billionaire hedge fund manager does not expect the next financial crisis to rival the one that kneecapped Americans in 2008 and nearly triggered another Great Depression. That said, the founder of Bridgewater Associates, the world's largest hedge fund firm, is concerned that when the downturn hits, likely within the next couple of years, by his reckoning, investors, companies, politicians, and policymakers will be blindsided or worse. Capitalism and democracy, our system of government, will be under heavier fire than it already has. And I quote, "I worry about the next downturn, which isn't imminent but also isn't many years away," Dalio said in a telephone interview this week. If you go out 2 or 3 years from now, there's a significant risk of a downturn at a time that we have a political and social polarization that is very similar to the late 1930s. Now, let's keep in mind that Ray Dalio wrote his memo in 2007, a little late. I mean, it was coming up really close to the actual crash. The thing is, he's doing something that a lot of people within our space do wrong as well. He's saying it's a few years out. A lot of people say it's this year on this date. I'm sorry, but he's wrong to say that it's going to happen 2 or 3 years down the line, because he can't know that as much as he can't know if it's going to happen in 3 months, because the problem is, like I said, the fundamentals are off the table. And again, he's saying that it won't rival the one in 2008. Well, let's think about this for a second. If the 2008 one was basically pushed off and, manipulated and propped up like a dead horse, is it not going to rival 10 times, tenfold? I mean, think about it. We have a system that has been propped up from the original crash and put off. Imagine pumping a bubble and pushing a beach ball underwater further and further and expecting it to not burst as bad as it would have if you just let it come down at that time. Of course it will affect democracy, quote unquote, or whatever you want to call it. Of course it will affect that. And you know what? Maybe it's time that this thing comes down and people reevaluate the entire structure of society, which has been centralizing and propping up these monsters for eternity. I mean, it's almost 1,000th year anniversary of the first fiat currency in China, in 1024 AD in China. Why are we thinking that maybe it's a good thing we just keep repeating this? Maybe instead of repeating it, we look at the system that creates a problem in the first place, look at these organized crime cartels called government and banks and central banks, and think about maybe we should break outside of that system instead of repeating history over and over again for eternity. What do you think, John?
Well, let's take a look at what have happened since 2008. For example, the balance sheets of the major central banks all around the world has increased by 300%, Josh. And that is why? Well, let's take a look at what they've been buying. They've been buying ETFs in Japan. They've been buying mortgage-backed securities with the Federal Reserve and the European Central Bank. And they've been buying a whole bunch of collateralized debt obligations. So they've been buying up the bad debt to try to cover up that the banks were insolvent. That's basically what they did. They went in and then they piled on a whole bunch of massive, terrible garbage debt that was defaulted on. And then now, of course, they're saying, oh yeah, we have an exit strategy. We're going to get out of the Fed has about $4.4 trillion worth of these derivatives and debt on their books. And they're saying, yeah, there's no problem. We're going to be able to have it. When I used to deal with investments, I always made sure to explain what the exit strategy was of the investment that I was proposing to my clients. And of course, they're like, go and ask the Fed, what is your exit strategy? How are we going to get $4.4 trillion of garbage sold onto the market without causing complete devastation? There's none. I want to talk a little bit quickly about other things they tried to do since 2008. And in 2008, there was an organization created called the Financial Stability Board. It was actually created by none other than the great Mario Draghi. He, of course, he put it together. He put the legislative body together. They have a whole bunch of working groups. They have a chair committee. But they tried to, implement more and more regulation because they believe that the state needs to reassert power over the financial markets because these corrupt bankers, were running rampant and capitalism was going amok because they let capitalism go free. They're talking about, of course, what they say, quote unquote, free markets.
It's really corporate fascism where the government regulates small businesses and out of a competition and prop up major monopolies, which isn't capitalism.
No, 100% it's not. It's just a bunch of propaganda propagated by these guys that are running. Now, of course, today we have none other than the great former Bank of Canada chief and head of Bank of England currently, Mark Carney. And Mark Carney, he's of course working with all these central bankers, and they call it a technocracy. The technocrats, it's running and creating these policies. They created the bail-in regime in the Financial Stability Board. They created a whole wide array, like you were talking about the living will that Deutsche Bank had to create. That was also created by these guys.
So among several other banks.
Yeah, and they're creating all these. They have what they call a GIFI, global important financial institutions. They created a whole wide array, and they believe that because the IMF was not able to do anything, there were too many cooks in the kitchen. They thought that it'd be great to have more dictatorial power in this Financial Stability Board, where most of the policies are put forward by the top heads of the central banks, they're the ones in control of the Financial Stability Board, and they believe that having such a little amount of people making the rules for the whole world was a perfect precedent to put, because then there was not anybody that's going to come and say, oh, we can't do that, we can't do this. So they've been working really hard. They're still working on creating a whole bunch of more policies to enslave people and of course take away the power from people. But no, wait, it's only the banksters that we're trying to stop from stealing from you.
Yeah. Well, and I want to put out a few factoids here, because we got the student loan bubble, we got this issue with millennials depending on the baby boomers, and the baby boomers spend most into the economy, but the baby boomers are dying off, and then they're going into debt
and out of the market.
Yeah, and then the millennials are going into debt, and then on top of that, we got the pension scheme. So they're looking at forecasting a $400 trillion shortfall globally by the year 2050.
Yeah, but don't worry, that's 2050, Josh. Yeah. Don't worry about it.
Which will happen way before that. And then we got a multi-quadrillion dollar derivatives bubble worldwide, which is absolutely unthinkable. And then you got the push for bail-in regimes, as if they're not preparing for something. You got you got Mario Draghi, who you mentioned, pushing to end depositor insurance at the ECB throughout Europe. I mean, that's massive. While they're trying to ban memes on Facebook.
Well, he might as well, because the FDIC and the CDIC is basically had no money to cover it anyways.
Yeah, and that is all in preparation for the same thing that the Fed is trying to prepare for, which is that the world reserve currency is going down, and they're trying to prop up interest rates in order to be able to drop them so they don't go negative. So in 2008 to 2012, they dropped about 5.5% interest rates. They have to push it up and push it up and push it up in order to avoid going negative, but it's going to come down much further and harder than it was before, because it's just propping up the same storm and adding more fuel to the fire. And what that is in preparation for, which is what I'm getting at, is that they want to push for the centrally planned global cashless society that China is really capitalizing on, alongside India, Sweden, Australia, a few other countries. There is a massive power shift, which we've recently gone into here at WAM, where China is colonizing countries around the world by loaning them way more money than they can afford to pay back, therefore essentially allowing China to take over corrupt dictatorships and take over parts of Africa and elsewhere, Montenegro, different places around the world. But I mean, this is a major issue, and this is all while the IMF is trying to wants a headquarters in Beijing, which is huge. They're preparing for the SDR, global world reserve currency. This is the SDR for the wealthy. The peasants will be picking up scraps off the side of the road, however, and we'll see a Venezuela-type society worldwide. If this goes through, I'm not sure if they will be successful, but nonetheless, they are preparing for it, and it's huge, folks. And China is most definitely trying to prop up themselves as the new world order, the new world order, the world order, and the world reserve currency.
Well, yeah, they're trying to position themselves in the global geopolitical scheme, and there's not very many contenders to become a world reserve currency. Even the euro has so many problems with it, with all of its states that are in there, all the debt. But that comes to another big thing that we need to talk about is, Ray Dalio said it's not going to be as big as 2008. Well, what we got to remember, in 2008, the delinquency was, what really started was $13 billion worth of U.S. mortgages that was in foreclosure and went bankrupt. And that's what, of course, that was collateral, like that was put into special purpose entities. Then they put that into mortgage-backed securities, tranched that into the collateralized debt obligations, and then the bankers bet against it with their credit default swaps. That's how, this bubble became so massive. Well, what's say that, the bubble today, it's not going to be bigger. We looked at India, I believe, had $210 billion in delinquent loans. And then you look at Italy has so many non-performing loans. Like, it's all over the world. It's about 300% debt to GDP, the total debt in the world that exists. So what we got to understand is, what we've done is we basically have just printed mass amounts of money, because that's what debt is. It's printing money out of the fractional reserve banking system that was, created in order to try to prop this economy up, because we should have been in, depression instead of, a great recession or whatever you want to call it. I believe we're still in the depression from 2008, and we haven't seen the back end of it, because the central bank bankers have not, let the markets do their thing, which is, go back to real market value. Well, that's, what they do. They try to manipulate it. But at one point, that's going to break. And people, of course, on top of that is going to suddenly say, like, what about, the US dollar? That doesn't look like it has value. Well, look at the world leaders today. They're going and exiting by having country swaps between each other.
Tons of them.
Yeah. So what you're seeing is, the empire of the United States and the Fed with the banksters running the Fed, that is kind of crumbling apart, the current system, the current paradigm. But of course, the bankers, as you said, the special drawing rights, they're working on that with then, devaluing every single currency in the world and then being backed by the special drawing rights. It's another insane idea, of course, by the IMF, the International Monetary Fraud, because they are working, like you said, the Chinese. I was yelling out the IMF there because they have been doing exactly the same thing as the Chinese are getting, like, oh, you bad Chinese, you're doing this, you're indebting people, and then stealing their assets after when they go bankrupt.
Sounds familiar.
Yeah, exactly. So, no, when you look at the whole world economy now, Josh, it just doesn't look like we're in a very pretty picture. It actually looks like we're 100% way worse than we were in 2008, because at least at that time, there wasn't very many, bankruptcies and in debt. But now we propped this, dead horse up so terribly that we added mass amounts, if you look at the scale on the M3s or whatever monetary supply measure you see, you just see like it's basically like starting to hockey stick, and you're getting to that end point where, this debt, like the world markets are saturated with debt almost everywhere now. It's not very many places that are not full of debt. And then, of course, businesses and homes and everybody, who's going to get into more debt? Well, there's nobody left to go into debt. So there's nobody left to pay that interest that they created on top of that you owe them. That is needed to be always created and paid off with new debt. And the problem is when you don't have any more people to borrow to, that is going to come crumbling down.
Yeah, and at the same time, we got stock markets that are insanely bubbled, that it's all based on investor confidence but not fundamental value, which won't end well. So let's look at this for a second. We got the old guard, the Chinese creating the first real fiat currency, real in quotations. Now we got the new guard, which is kind of like the old one, but spruced up with a dress and some lipstick, which is a cashless society. And if you have your money, if you put your money in the bank, it's not yours, it's a bank's. And if your money's always going through the banks via digital transactions and fiat legal tender laws, it's never your money, it's always a bank's, and you are essentially a slave to the banking system, so they can get away with bail-in regimes. You can't do a bank run. They can track everything.
Controls.
Yeah, they can track everything you do. They can follow you around. They can do social credit to stop you from being able to spend money. This is all in preparation for something big. They know what's happening. You need to know what's happening too, and you need to know how you can keep yourself safe from this disgusting practice that's gone on for almost 1,000 years, which is self-sustainability, food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. Of course, gold and silver as protecting your purchasing power, wealth, insurance. This isn't investment advice. This is our opinion, but let's look at history, folks. We have to protect our purchasing power, and then, of course, decentralized cryptocurrencies based on fundamentals that are actually there. Use case, something scarcity, application use, demand, something that actually gives it value. And there are a few out there that are amazing, that are world-shaking, but then at the same time, you got some really bad ones. So do your own due diligence, folks, but decentralize everything. Rule yourself. Break free from the system. Don't fall for the same old tricks of the old guard, the old monetary system, the money masters, the people that have enslaved people in debt servitude for eternity. If they shove you down a bottomless pit of debt, you are forced to ask for a ladder up from the government and the banking system, pushing you into perfect servitude to them right where they want you. You don't want to be in that situation. Just like China puts all these countries in debt, well, this monetary system is going to put you in debt. And how do you think that works? Well, while China owns all these countries that owes them all this money, now you're going to be owned by the monetary system, the government, the central banking system, the banks. And it's on you, folks. You need to do your own due diligence. You need to break free. You need to be financially responsible. For responsibility is a hallmark of freedom itself. John, final words?
Well, final words is, we're about to repeat the same thing over and over again. It's like a cycle that always goes through the fiat monetary system where there's a mass expansion of debt. Like last time it was the stock markets mostly, but it was, fueled by a little bit of some little small real estate bubbles. Now those bubbles have become a lot massive. The bubbles that, they were kind of like shrinking, they were about to pop, but then they just reinflated, a whole bunch of air into those bubbles, the monetary, a whole bunch of paper money getting, electronic money getting printed, from the banking system. And then, of course, they use the deficit spending of the governments around the world to create that money. You got to understand that. That's why all the governments around the world has to spend massive amounts of money extra than they have. They have to borrow that money in order to let the commercial banking system then create tenfold of what they've, borrowed. So that's how, this whole scheme has been going on. And, it's at its last legs. A monetary system usually lasts between, like a fiat, usually lasts between 20 to 30 something years, 35. So we're a little overdue now. And of course, we got to remember they've become, mass financial engineers, but that doesn't mean that it won't last forever, because it's all a trust game, guys. If you stop trusting in that fiat currency, that garbage, paper that they give you for your work or for whatever you do, you got to understand that that doesn't really have value if you don't let it have value. You could suddenly say, like, I don't want to accept this anymore. And then that goes down with the whole monetary system right then and there.
Yeah, absolutely. They're just propping it up and making it worse than it was before. And it's going to be worse when it comes down. No matter how much they think they can centralize it forever, they simply cannot. Also, closing this off, make sure to check out our recent interviews with Ron Paul, Robert Kiyosaki, with good insight from different sides of the coin on this issue, as well as check out John's book, The End of Freedom, How Our Monetary System Enslaves Us, which is you can find up on Amazon, of course, and that was written, 2015 or so?
Yeah, about 2015. And Venezuela was predicted in that. Of course it happened. Venezuela is garbage right now, the fiat currency there.
Yeah, and Argentina and all that crazy nonsense. So make sure to check out that book on Amazon. And until next time, we will just keep on continuing to talk about these issues around the world. It's been 10 years, but well, things have changed, but for the worse.
Never
it's
forget.
Just basically repeated, make it worse. Yeah, never forget September 15th, 2008, and we will never forget, and we will never forget the historical implications of this problem going back 1,000 years, never mind 10 years, and it just gets worse and worse as long as we continue the same old practice.
Well, and September 11th, 2001 as well. That was also some of the starts of all these financial engineering. So remember that. Think about it.
Yeah, and watch out for those monetary false flags as well. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized by YouTube as they bring in the ADL to flag all of our content as hate speech. Also check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also check us out at Steemit at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in cryptocurrency, Steem that is. So don't forget to check us out there and find us at Anarchapulco 2019. I know it's early, but this is such an exciting event coming up with Ron Paul, Judge Napolitano, David Icke, Larkin Rose, Jeff Berwick, all the usual characters, and it's going to be amazing. So we hope to see you there. Make sure to check the link for Anarchapulco below and use promo code WHAM to save as much as 15% on your tickets. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.